Earnings season approaches, but can profits defy President Trump's tariff turmoil? Companies are getting ready to open their books for the second quarter, with investors looking for signs of an impact from President Trump's trade war. While earnings growth is expected to decelerate for the first 3 months of the year, a sharp decline in the dollar could help to offset possible tariff effects. Joachim Klement is head of strategy at Panmure Liberum. So, Joachim, will higher tariffs have started to weigh on sales forecasts or corporate spending plans this quarter?
Well, I think they will definitely weigh more heavily in the second half of 2025, but we will probably see some first signs in the second quarter results. There have been some tariffs that have been put in place in April that will weigh on some companies, particularly in the steel and automotive sector, that were more heavily hit by it. But overall, I think it's too early to see a major impact.
Bank of America as well lifted its S&P 500 target on corporate America's resilience. So will profit growth be enough to support stocks at higher prices?
Well, I very much disagree with Bank of America's assessment there. I do think that the tariffs will lead to a weaker earnings growth for the full year, and in particular then a weaker S&P 500. If companies pass on those tariffs that will inevitably come in full force later in August, it will mean lower demand and as a result, lower revenue growth, which will hit earnings growth. If, on the other hand, they swallow those tariffs, well, that is great for US demand because consumers don't have to pay for those tariffs, but it will significantly reduce the profit margins. So either one will have to happen. You cannot have both.
The big banks kick off the reporting season next week. The sector is up sharply since April's post-tariff lows. So are they well positioned?
The banking sector is definitely a sector that is less affected by tariffs, and additionally, the yield curve is relatively steep, meaning that net interest margins remain high for the time being. So overall, banks should do all right. However, I think more importantly is to look at their trading revenues, which should have been boosted by the high volatility in April and May.
So will consumer spending be the big worry during this earnings season?
I think very much so. As we've already said, businesses will try to pass on higher tariffs to consumers in the form of higher prices, and that should reduce the outlook for consumer demand for the rest of this year.
So finally, Joachim, let's look over to Europe. The euro's strength is another emerging issue. Will this weigh heavily on companies' margins?
I think in Europe, yes. Europe, which is far more export-oriented than the US for that matter, will see some headwinds from the stronger euro. And that actually can provide fertile ground for increased speculation on further rate cuts by the ECB in order to support European businesses in this environment.
Joachim Klement of Panmure Liberum. Don't forget, you can watch more videos on Reuters.com.